All right. Welcome, DoorGrow hackers, to the DoorGrow Show. If you are a property management entrepreneur that wants to add doors, make a difference, increase revenue, help others, impact lives, and you are interested in growing your business and life, and you are open to doing things a bit differently, then you are a DoorGrow hacker. DoorGrow hackers love the opportunities, daily variety, unique challenges, and freedom that property management brings. Many in real estate think you're crazy for doing it. You think they're crazy for not, because you realize that property management is the ultimate high trust gateway to real estate deals, relationships, and residual income. At DoorGrow, we are on a mission to transform property management businesses and their owners. We want to transform the industry, eliminate the BS, build awareness, change perception, expand the market, and help the best property management entrepreneurs win. I'm your host, property management growth expert, Jason Hull, the founder and CEO of DoorGrow. Now let's get into the show. And today's show is going to be all about mobile home park investing. And my expert guest is Andrew Keel of the Keel team. Andrew, welcome.
Thank you.
So Andrew, before we get into this idea of mobile home park investing, which I'm guessing a lot of property managers right at the outset are like, not my thing. I'm not even going to listen to this one. I'm going to skip this episode. So before you do that, Andrew is going to convince you that it might be a good idea, right? Maybe.
I'll give it my best shot. I think one of the reasons why I like the asset class so much is because of that stigma that a lot of people see, is that initial sticker shock of the asset class. So that's a huge part of why the industry is so attractive, is because some people won't even touch it with a 10-foot pole, and that artificially creates a moat to this investment class.
Right. There's a little protection built in, right? Yeah. Okay. But some of them are thinking, well, that's kind of like having a trash heap around the property. Like nobody wants to come in, but maybe it doesn't look very appealing. But so look, before we get into that, Andrew, tell everyone about you. Like, you've got a lot of things going on. So give us a little background. How'd you get into real estate investing, property management? How'd this all start for you?
Yeah, sure. So I started flipping houses around Central Florida and wholesaling residential contracts, and did that for about 2 years. Was trying to become a landlord, but I started with nothing. Like, my parents went bankrupt when I was in college, lost the house I grew up in. And, I knew I wanted to be into real estate. I knew I wanted to be a landlord, but I didn't have a lot of money. And I initially thought, like, hey, I need to have a lot of money to be a landlord, because, I can't afford to buy these properties. But that was before I learned, how to use other people's money and kind of leverage other tools. But so I started flipping houses, and I got a deal through a yellow letter that I mailed out on 2 mobile homes in Ocala, Florida. That's just a couple hours north of where I live in Orlando. And these were nice vinyl-sided shingle roof homes that were manufactured in the mid 1990s. And I could buy both of these for $2,200 cash. So I was like, I don't know anything about mobile homes, but this is a great deal. And I just knew it. I had 2 titles. I left that day. I gave him the cash, and I came home and got on YouTube, and I typed in how to make money with mobile homes. I was like, I don't know. There's got to be a way to make some cash off these things. So I came across a guy named Lonnie Scruggs, and he teaches, well, not anymore, but he used to teach this class, and he has a book that he wrote called Deals on Wheels. And it talks about buying mobile homes and then fixing them up and selling them on contract to an end buyer. So that's exactly what I did with those 2 mobile homes. I was able to fix them up, just clean them up, basically little paint and some new flooring. And I sold them for like $3,000 down and $250 a month for 5 years. So I did that on both of them, and I only paid $2,200 cash for both. So I was like, wow, this is a great model. It's not forever cash. That was my end goal, but this is great, temporary cash. So I ended up doing that 19 more times and bought individual mobile homes through various parks throughout Central Florida, and then sold them on contract. After doing that, I met some mobile home park owners. And again, I was like, I had this idea in my head that, you need to be just extremely wealthy to buy mobile home parks, the whole community. And through talking with them, they kind of, gave me that epiphany of using other people's money, and then I could be the sweat equity that would, manage the properties. And that was like a huge aha moment for me. I immediately became glued to the asset class, read every book, went to every seminar, went to the MHU boot camp a few times, and just became a sponge for the asset class. And that was a defining moment for me, getting into, that industry. After I went to one of the boot camps, I met a passive investor there that was just looking to invest and didn't want anything to do with the operations. He happened to be in the finance industry and worked really long hours, but had a ton of cash that he wanted to deploy into this asset class. So he partnered with me. We bought the first mobile home park. It ended up being a really huge success. And then after that, we ended up buying 4 more communities since that one went so well. And since then, I have brought on more investors from friends and family to others outside of that. We do syndications now where we'll aggregate money from a pool of investors and then purchase these assets into a single purpose LLC. So it's been a very awesome ride. It's been exciting. It's been blood, sweat, and tears into this at this point. And now we're at 23 communities, which is just amazing and a blessing. We have, a ton of people that work for us now and that are just awesome members of our team. So that's a little about how I got to where I am today.
So you never just like woke up when you were a kid and said, I want to grow up to do mobile home park investing.
No, that's not how it went at all. I just kind of fell into this, but I believe mobile home parks are a moated investment for a few reasons.
Okay.
One of those that's really important is it has the highest returns out of any form of rental real estate. So right away, I was attracted to it, right? Number 2, that makes it like that much better is that the demand for affordable housing in this country is off the charts. I mean, I think you could talk to any real estate expert and they would tell you that. And then number 3, which is like the main reason, number 1, put it at the top of your list of why mobile home parks are a great asset class to invest in, is because the supply is limited. Any other asset class, whether it's self-storage, multifamily, whatever, it's easier to develop those and get those approved. Where mobile home parks have this stigma. So there's this, not in my backyard initiative where, people don't want a mobile home park built right next to their subdivision, right? So it's very hard to get zoning approved for a new mobile home park development. And then number 2, from an economic standpoint, mobile home parks are a loss leaders for the municipalities because on average, it costs around $11,000 a year to put a child through public schooling, with the cost for the schools, the teachers, et cetera. So in mobile homes, the owners of the mobile homes, they only pay, maybe $50 to $100 a year in their personal property taxes on their mobile home that they pay at the DMV, just like you would pay taxes on your vehicle or boat or so forth. So the taxes are very low, but if, say a family of 4 that has 2 kids in elementary school, that would be a huge loss to the local municipality every year for having that, family in their municipality. So that's a big reason is the supply is shrinking because, on average, there's like 10 mobile home parks across the country that are torn down every year. And it's continuing, it's getting more than that, more and more as they're torn down and put into better land uses for multifamily or whatnot. But it's very rare, if any at all, are being developed, from the ground up. So it's very interesting, from a supply standpoint.
So are you involved in getting them developed then?
I'm not. There's lower hanging fruit in communities that are already established, to be honest, and it's less expensive to go in and fix an existing infrastructure. There's the majority of mobile home parks, I think like 80% of them are owned by mom and pop owners. So it's not a, institutionalized asset class like multifamily and self-storage. So with that, you're able to come in and increase value very quickly through increasing net operating income, whether that's through modest rent increases, billing back utilities, increasing the occupancy. A lot of these communities have been owned by a mom and pop for 30, 40 years. So they have a lot of equity. A lot of these are paid off free and clear. So with that, we've been able to acquire 5 communities with seller financing, because they're able to be more flexible since they don't have, some of the restrictions that a bank would have, on a mortgage. So it's a very exciting asset class. It's new to a lot of people, but it's definitely a moated investment in terms of, it's not something that you want to really kind of go to the country club and brag to your friends about, but it also is very unique in that aspect, because that stigma does keep some investors out of it and keeps cap rates significantly higher.
Okay. So you had mentioned that first thing you had mentioned was it has the highest returns. So qualify that a little bit, compare it maybe just a little bit. Like, let's back this up, because some people listening maybe their ears peaked up when they heard that.
Yeah. So, if you're familiar with commercial real estate, properties are valued off of their income, right? There's the income model, and cap rates for mobile home communities are typically between, let's say, an 8 and a 12 cap. So if you compare that to multifamily, you're not able to get as big of a spread between your interest rate you're paying on your loan and the cap rate that you're purchasing the property for. So the cap rate is the net operating income divided by the purchase price, for those of you that aren't familiar with that. But basically, we aim to get at least a 3-point spread between our interest rate, that our loan that we have on the community, and the cap rate that we're paying. And if we're able to create that delta, we can offer our investors a 20% cash on cash return annually.
All right, I'm taking notes. Okay. So if you can offer investors that, it's not too difficult to get investors, you're finding?
Yeah, we've been very fortunate to have a lot of people reach out to invest with us. At this point, I would say the bottleneck in our business is finding good quality deals that are big enough to move the needle, because there's a lot of communities that are between 50 and 100 lots that are that's a good place to play in. But the communities that are bigger than that offer even more economies of scale in terms of expenses versus income. And those are the ones that are getting eaten up by institutional buyers at this point. Some of the REITs, some of the large private equity firms are now playing in the space because they've seen the high returns. They know that supply is limited and demand is off the charts. So they're going after those larger properties, and those are harder for us to compete with because those cap rates are getting compressed.
And this is just in your local market that you're willing to work and target. Is that correct?
So we have communities all the way from Georgia to North Dakota, all the way down to Tennessee, and then all the way across to Pennsylvania. So we're like right in the center, for the most part, is the center of the United States. And we did that for a couple reasons. It was mainly strategy. Hurricanes primarily don't go across the Midwest. However, there was a polar vortex last year, and that was absolutely crazy. But hurricanes, so it's protected against those. The stigma of living in a mobile home is not as strong in the Midwest as it is in other parts of the country. But for the most part, we aim to purchase communities in the middle of the United States.
Got it. Okay. So, how difficult is it for somebody that's currently focused on single family residential, or maybe they're doing commercial, or maybe they're doing multifamily, to add this in as another business, basically another arm of their business, and to work on this?
That's a great question. So first off, I think we should say that third-party property management for mobile home communities that's like across the nation is like basically unheard of. There's like 2 or 3 companies that do it, and they're not doing it at a high level. So it's it's very tough because it is management intensive, even though, a lot of these communities don't own the mobile homes themselves. They just own the dirt underneath of them. So your maintenance costs are less, but there's just other reasons why, it's a little bit difficult to manage these communities, on a large scale because of the turnover and things like that do happen. So,
and you're managing just the parks. You're not managing individual rental properties.
correct. Yeah. So we get lot rent off of the ground. Now, as a necessary evil of the business, when a home goes up for sale, or say we come to own one of these homes, we have to then sell it to the tenant for them to become a tenant-owned resident and rent out the land to them. So there's probably about like 20% of our total units that are homes that we've sold to the tenant on contract. So they're still responsible for maintenance, but it's sold to them, on like a rent credit program is what we call it, where they're making payments monthly to then pay off the home. And then eventually they will just pay lot rent.
And so, and we didn't say this at the beginning, we probably should qualify you a little bit more by saying how many units are you over right now? How many are under management?
We are at 1,497 units right now.
Wow. Okay.
So, and that's across 23 parks.
Okay. All right. And so, and how critical is it to have boots on the ground at all of these 23 locations?
It's paramount, in my opinion. We have an on-site manager at every single location. That's typically a resident that had the nicest home, and we converted them into an on-site manager. And
Right.
all they are is just basically an eyes and ears person that communicates with our corporate office and, keeps us abreast of what's going on in the community. And that has been just really important for us to just, be able to understand what's going on. But yeah, typically we go after, someone that has a fixed income like Social Security, and they have one of the nicest homes in the communities, and, they're retired and they're home, and, they're like the community watchdog, and they can keep us up to date on what's going on. And then our corporate office, which we have 14, corporate office offsite management employees that handles everything from the financials to the project management to collections to, bookkeeping, etc.
Got it. Okay. And these are all parks that you have some sort of ownership in, correct?
Correct. Yeah, we only manage parks that we have ownership in right now.
Got it. Okay. So for those listening, if say somebody has a property management business, maybe they're a real estate investor, and they're wanting to get into this, what advice would you have as the kind of the first initial step? They're looking around, they notice there's maybe a mobile home park or two that probably could use a little love, and maybe the mom and pop owners would be willing to have a conversation. What's sort of the first step that you think they need to be aware of? What knowledge do they need to gain first? Maybe.
Yeah, that's a great question. I would say, you need to go get educated. You need to go to like the MHU boot camp that's offered by Frank and Dave. That's like the industry leading educational platform that teaches everything from how to find deals to how to value them to how to manage them. And within that class, you'll learn about the utility infrastructure. And the utility infrastructure is by far the most important aspect of these communities because that's the most expensive to replace. So, for example, a community that's on city water and city sewer is, more attractive because there's less risk on that half versus a community that's on a well and septic, because in a well and septic, there's a lot more testing involved because now you're servicing a community that is using that water supply. So you have to make sure that there's certain chlorine and certain tests done on a consistent basis to manage that, water system. And the same thing if you're on septic or a wastewater treatment plant. Wastewater treatment plants can cost $500,000 to replace. So you got to make sure that they're maintained on a high level. And if they're not, you could be fronting the bill for a very expensive project.
Got it. So a lot of what makes a mobile home park work is underground, is what you're saying.
Correct.
Okay. So it's not just land. There's infrastructure that's really critical underneath.
Very, very critical. And, those are all items you're able to depreciate. And we love that part of the business because mobile home parks are also a known tax shelter because of those improvements.
Interesting. Okay, so you said for Ink and Dave over at NHU.
M is in Mary, H is in Harry,
Got
U
it.
is in underground.
Got it. And is that Mobile Home
Mobile Home University.
University? Okay. All right. I thought I would make sure. All right. So cool. So what else should they know about mobile home park investing that we haven't covered so far?
I think, I'll just kind of just give a vague overview of it. There's a model where the community owners will own all of the homes and basically operate it as a flat apartment community, where every home is a park-owned rental. And that is not the model that we follow. We are looking at a more scalable model to, have the tenants own their homes, and then we just have lot rent. And there's a couple reasons. Obviously, repairs and maintenance will be a lot less. Your expenses will be a lot less. But then also your turnover on a tenant-owned home unit is approximately 4 to 5% annually, where the turnover on a park-owned home unit is closer to 50% annually. So, from a management side of things, if you have a tenant-owned home community, you're going to spend less time, dealing with turnover compared to a park-owned home community. And there's communities out there that are done both ways, but we prefer the tenant-owned home model. In regards to mobile home investing, mobile home park investing, it is affordable housing. So, if you're familiar with affordable housing in multifamily or, HUD housing, things like that, you can deal with a lot of the same residents, but there's also different classes, just like in any asset class, where there's very high-end mobile home communities that have swimming pools and community centers and par 3 golf courses. And then there's communities on the lower end that, are just not taken care of very well. And the homes are really close together and there's a lot of older homes. So we try to aim right in the middle. We're looking at like the C-class parks that maybe we can bump up to a B. That's typically where we play.
Got it. All right. So for those that heard all of this and still thought, there's no way I want to touch this. There's no way I want to go to MHU. I don't want to do any of this stuff. But those returns sound pretty sweet. Maybe I should talk to Andrew. Or maybe there's a mom pop that's listening and they're like, you know what? I'm tired of this garbage. I'm tired of dealing with this place. I want out. It's time we retired from running this mobile home park. And they're like, maybe we could have a conversation with Andrew. Who are the people that you're wanting to get in touch with you, whether it's investors, whether it's potential people that can create a deal with you? What are you interested in?
All of the above. If there's a wholesaler that comes across a mobile home park and they want to assign it, or it's a property manager, or maybe it's someone that wants to partner on their first deal because they want to learn the operations before just jumping in with 2 feet. All of them should reach out to me. My website is keelteam.com. That's just KEEL team, like a basketball team.com. And I'd be happy to chat with you. And I love talking about mobile home parks. So you won't have to pull my leg too hard to get on the phone with me.
I can tell. So, well, Andrew, I appreciate you coming on and sharing a little bit about mobile home park investing, helping kind of open my audience's eyes to that just a little bit. And maybe you'll get a few phone calls, or maybe some people will get into this. Who knows? Maybe there'll be some sort of hybrid where there's some deals even worked out. Are you looking at expanding outside the Midwest at all?
Yeah, we've looked at some deals, in many different areas, not in California, but outside of that state, we've looked at several deals, but you have to hit a certain number of units for it to make sense to go into a new market. You don't want to just go after a 40 lot mobile home park in, Idaho, when the rest of your communities are all in, Ohio and Pennsylvania. So we definitely would look other places, and I've JV'd with people that have brought me a deal that they didn't have any money, but they just found this great deal. So I've done things like that, and I'm totally open to sharing what I know on the operations side, to others that, bring a deal to the table.
Awesome. Well, Andrew, I appreciate you coming on the show, and wish you continued success.
Hey, Jason, thank you so much for having me. I really appreciate you having me on the DoorGrow show.
All right. Cool. So make sure you reach out to Andrew if any of this sounds interesting and you are curious about this, or maybe in working with him or in getting into it yourself. That was Keel Team. His last name, Keel Team. He said like a basketball team.com. And then if you are looking at figuring out how to grow your property management business, I had so many calls this week from new clients and that have come on board with us. And, there's this common challenge that property managers tend to deal with at various stages. I've noticed that, you've got that first sand trap at about 50 or 60 doors in the single family residential space where you're dealing with how do I start to get ahead? How do I create some leverage in this business so I'm not just trapped as a solopreneur here forever? How do I start, getting more doors than I'm losing so I'm not just breaking even every year in terms of growth? So if you're dealing with any of those kind of challenges, we're really good at helping you break through that initial barrier. And then there's that second sand trap, which is usually if you can break in a healthy way past 100 doors. And if you haven't done that yet, talk to us. But if you break past that 100 doors in a healthy fashion, which means you're not just a real estate brokerage that's really healthy and you've got this unhealthy property management business on the side, we can help you with that too. But you do it in a healthy fashion, then you'll end up usually in the 200 to 400 door category, and then you get stuck. This is where I see a lot of property managers stuck in NARPM, a lot of property managers kind of just struggling. And there's specific things that you need to break free from that sand trap. Usually the challenge is they're not getting the right team members. They're not able to retain team members a long time. They're trying to build and systemize the business and build the team. They just don't have a business that's scalable. So even if it were fed a lot of potential business or a lot of deals or a lot of leads, once they approach that 4, maybe even up to 500 units space, the business owner feels really stressed out. They've built a team usually the way a solopreneur thinks. They've built a business the way, based on what the business needs, not on what the business owner needs to lower their pressure and noise. And so their pressure and noise is through the roof. Every person that they have on their team is coming to them for everything and asking questions. And at first it feels really exciting when you're small, but as you scale and as you build, it feels really suffocating and you become the biggest bottleneck in the business. And so if you're experiencing that, then reach out. We would love to have a conversation, and so that we can help you break past that second sand trap as well. So anyway, I'm Jason Hull over at DoorGrow. Make sure you also check us out we've been really pumping up Instagram and getting going. So follow us on Instagram. It's just DoorGrow. And make sure you get into our community, the DoorGrow Club Facebook group. You can go to the DoorGrow Club. Just go to DoorGrow Club, DoorGrowClub.com. And until next time, everybody, to our mutual growth. Bye, everyone.